Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Wednesday's edition of Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer Israel is out at the San Francisco FinTech event. We got a busy show lined up for you today. A lot of good stuff to cover in these markets. First of all, we will talk about the follow-through in the auto parts sector. Snap IPO investigation. The Goose is loose after earnings. We do have some Brexit jitters, and Starbucks is going to lay off 5% of its corporate workforce. Oil is attempting to end its 12-day losing streak here, and we want to make sure we got the video up here. Dennis, Triple D, you see the video?
No, I do not see the video. I think you just see pre-market prep. I hear the audio. I think we got the audio. I don't think you got the video showing here yet. So Joel's trying. He did good yesterday. Come on, Joel.
I did exactly what I did yesterday.
Don't let us down. Waiting. Joel's working on it. Technical difficulty. We got other helpers coming in. I see pre-market prep. Maybe it's just a radio show today.
Nope. I got the. Oh, I know what I did. It was. I know what I did.
He's figured out the problem, folks. Do we have to start over? Or can you fix it on the fly?
No, I can fix it on the fly. You know what it was? It was the old share screen trick. I did not.
The old share screen trick. Let's see this. Let's see the charts. Can we see them?
Yeah, we should be able to see them here in 1 second.
You're listening for the first time. You're probably like, what the hell is going on?
These guys are, oh man.
Apologize to first time listeners, but we've had gremlins, and our seasoned listeners know we get gremlins the odd time when Spencer Israel is away. And we are a producer, and we got the chart. Joel, you're back.
I'm back.
Totally redeemed yourself.
A quick recovery.
You know where that's from?
All right, S&P.
He just ignores me. Go.
S&P futures here are down a little bit, down 50 cents here at 27.27. Had a pre-market high here of 27.4375, a pre-market low of 27.11. Looking at crude. Crude is trying to end that 12-day losing streak. Crude is trading up 44 cents here at 56.13. That is the biggest losing streak in the history. This 12-day losing streak is the biggest losing streak in the history of oil. We're going to talk a little bit about that when Dennis comes on here. That's putting some pressure on the bond market. 15% of the high-yield bond market is in the energy sector. So that's something we will have to keep an eye on today as well. Gold hanging out here, up 50 cents at 1201.90, but silver slides under $14, down almost 2 cents here at 13.96. And I don't have Bitcoin on this layout, so I could just tell you Bitcoin is flat at like 6,200. That's all I really have to say. But Dennis, how are you doing? A choppy after hours and pre-market session. Is your P&L getting chopped up?
I know my P&L is choppy all over the place. I'll tell you what else is getting chopped up right now is Macy's. Joel, go to your Benzinga Pro. Give us those numbers. I just watched Macy's rally up to over 37. I just watched it fall to 34. And you know what? It's back here at 35.79, basically flat. It is getting really chopped up here in the last 5 minutes. Just reported earnings here. Macy's a wild child here right now.
Okay, well, first, let me get everything up here with the pre-market chart so we can follow the action here. Currently trading down just 6 cents at 35.73. They came out with a Q3 beat of 13 cents. Estimates were at 14 cents. They came in at 27 cents and just came up a whisker shy on revenue, 5.4 billion versus 5.41 billion. So a mixed report here, a nice beat on the EPS, but not the revenues perhaps the street was looking for. You could see that big spike over 37.50, and then the big drop here under $34 here, but just hanging out it unchanged here. Dennis, give us your take on Macy's.
Comps up 3.3% versus estimates 2.8%. The earnings they do see, and it's 410 to 430, and they saw before 395 to 415. That would appear like a raise. They don't care here. They're hitting it now, and it's starting to get hit pretty hard, down 2%. I was trying to play it a little bit there. I had a small position on, and I was like watching my P&L just go wildly, and I was like, no, thank you. This is way too wild for me. And I actually turned around and ended up scratching the trade. Somehow scratched it after I watched the P&L swing way up, swing way down, and then it came back to flat, and I was like, I have no idea. So anyways, these things just on earnings can be so wild. You know, you can go and sometimes say, okay, well, what did it look like going into it? Well, they hit it a little bit going into it. They hit everything. The last couple of days, actually, and the retailers got hit pretty hard there yesterday as well. So you could say, well, they didn't need to blow it away. They didn't blow it away, but they didn't do bad either. So I'm actually kind of surprised it's trading down. I would have thought maybe you get a little relief rally on this, which I guess you saw for 1 minute there. But this market, the interpretation of the earnings is sometimes a complete mystery.
35.5, 35.45 was the low from yesterday. You had another low at 35.28. So I'm going to use that. I'm going to use yesterday's low as a bogey here. If you can hold that area, maybe get up. You had your close right here at 35.79. So I think it's important to, get green, maybe, get in the 36 handle here before the session starts, and maybe lean on yesterday's low. After that, little support at 34.96. That's pretty close. That's 50 cents away. But if you're looking for another target on the downside, 33.76 was your November 1st low here. So you had the rally along with the rest of the market. You made a new high for the move yesterday over $38. But at this point here, I'm just trying to hang in here at yesterday's low. So we'll see if what Macy's could do today. And overall, it hasn't been a bad year for Macy's for the retailer, but certainly need to get over 38 for a major rally.
Yeah, a lot of other reports here. Let's stick with the retailers just for a second here, because a wild child this morning is Canada Goose, GOOS. You were saying the goose is loose. I'm not up north anymore, so I won't be able to look outside and take a picture of any of my Canada geese that are on my lawn up there. But I'll tell you, stock is getting a nice lift here in the pre-market.
Yeah, they like that report here. I do not see an estimate here for either revenue, so I'll just give you the EPS. The EPS was 35 cents. Whew, revenue, Dennis, 175 million. So that means they sold what, like 10 or 12 coats? Boy, it was, wow. I don't know if this is correct. Last quarter, it was 34.4 million, and then they jumped to 175.
Oh, they're growing.
Yeah,
they're growing. There was a lot of Canada geese out there. I tell you, there will be no problems with, and it's made with the goose feathers, obviously was a big joke, but there'll be no problems finding input here, because I'll tell you, there's so many geese in Canada, and especially up north. They're everywhere. But that's good. It's good numbers.
Yeah, great numbers. Trading up $8.42 at 67 even. You're trading right at the high pre-market session, 67.50. I don't know if this is a new all-time high for the stock, Dennis. The previous all-time high was at 65.80. So nope, 68.75. Still got some meat on the bone here. In June of this year, I don't know who would be buying those coats in June, but anyways, 68.75 is your all-time high. That's $1.75 away. That would have the stock up over $10 on the session. But as you know, in this market, just about anything can happen. Cannot give you really a fade number here because it's just been straight up. So maybe, keep an eye on the low from the last bracket, the last 15-minute bracket going into the open. But let's see if we can hit that all-time high at 68.75.
Jumping over here, move away from the retailers just for a second. We'll go to the pot stocks here. Reporting last night was TLRY. TLRY. Give us those numbers quickly here. We also had another pot stock reporting here this morning, Canopy Growth, CGC, and both these stocks are getting hit.
Well, we have a beat from TLRY. Street estimate stood at 12 cents. They came in. Oh, no, that's a beat. They were estimated to lose 12 cents, but they only lost 8 cents. Just flat on the revenues. The street was looking for 10.12 million. Man, that's not a lot of money. And the revenue actually came in at 10.04 million. So mixed, well, a beat on the EPS, a miss on the revenues. Man, when the stock made $10 million in a quarter, how in the hell did it ever get up to $300, Dennis?
That's just called short squeeze.
Okay. All right.
Low float, short squeeze.
What do you think?
Anyways, ridiculous. It all got ridiculous. We were joking about it a lot back then. We knew it was going to end ugly, and it's still actually going. But I mean, if you bought it anywhere, you can't chase stocks like this. Not, with investment money. I would say not even with swing trading money or day trading money. When you're chasing stocks that go up 200 points in 3 days, you're probably, it's going to end ugly. And 3 days later, it did. So it didn't last long. That was crazy moves. I don't know what to say on this. Pot stock charts are starting to look broken here again. I mean, you had the nice, bounce from the lows right back in October. Those are gone. Now you're going to re-challenge those lows, it looks like, on a lot of these stocks. Tilray, you can say the low, and it's a ways off, so it's off 84. But CGC is not that far off the lows now. Low of the move, 31.82. It's $35 here in the pre-market. Maybe those double bottoms hold. Valuation on these things is still crazy on all of these stocks. So that's why none of them are in my investment portfolio. And the thing is, and this is the big argument, I think, is that, it's legal. And a lot of these Canadian companies here, there's going to be competition coming for them now. Now that's full legal. There's going to be more licenses that are granted. There's going to be more competition. Yes, it's still regulated. And yes, maybe these guys got, the early mover advantage here. But at the same time, I think it's going to get a lot more competitive. And that's why, I don't want to pay 80 or 100 times, or even, higher in some of these cases for these stocks. So I'm just scared. And that's why I think I'm staying out of the pot stock craze.
If you're a Tilray bull here, you want the stock to hold 105. I'll give it 105 even. Not yesterday's low, but Friday and Monday's low, 105.28 and 105.55. That's just a real loose number here, but you held up on those 2 sessions. So I say over holding 105, that's your bogey. After that, if they really decide to whoop up on this stock, I don't see anything until under $100. Of course, 98.50 was your November 6th low. If you do go into rally mode, a lot of people would sure like to see that close. That closes 111.55, and really another number on the upside. Let's call 116 even. You got a pair of highs here, but really tight ranges here ahead of the report. Let's see if 105 can hold. Canopy Growth here, I don't have estimates for this one either. They lost 76 cents, and they make a little bit more money. 17.29 million on the revenue. Dennis, I'm going to pull up the chart of Canopy Growth here, and I'll let you break down the technicals first.
It's come off significantly from the highs. One thing I will say is I think you'll find some buyers near those lows, the 31.82, call it $32. I think there's some buyers down there. I think there's some people interested in short-term trades. I can't argue with your bounce. The thing's off from 46.74, just fell $10 in 5 sessions. And I think there's some support below. Again, valuation is too extreme for me to get interested in it. I know Constellation Brands didn't mind paying up here. I guess, if you're thinking, Constellation was willing to buy it here at $28 or $30, whatever they paid, maybe I'm willing to pay 33 or 35. I guess that's an argument there. But again, valuation of these pot stocks is tough, and the story has just been broken since the day before it, and it wasn't the day after, it was the day before it went legal. That was the day they all started collapsing, and they really, they had the nice bounce, but they really topped out that day before legalization. So I don't know, until I can start seeing some uptrends form or something, I think all of these stories are over. I mean, NBEV continues down. It had the offering at $3.50. It's well below that price. Sometimes those offerings can act like a floor. That is not the case. That looks like it's got $2 written on it to me. I don't know if it's going straight there. Obviously, things take a while there. The IGC went well below that when it went off board, and when I was calling it at $10 down to $2. I've been kind of saying NBEV for a while here. I thought could eventually get back to $2. I said that a few times if you rewind the tape over the last couple of months. We're still a ways away from there. I still think it's eventually going there.
All right, boy. You said a lot of things there, but
I bounced around a few
I
points.
know, and then I'm looking at like the chats, and I better start taking better notes here. Let's see. For canopy growth here, you found a little bit of buyer here. Not a major buyer, but someone has an opinion here at 34.50. Your pre-market low is 34.60. You bounced off that. That'll be a level to hold. If, in fact, that doesn't hold, I'd be looking for $32. I see a pair of lows flanking the $32 level, $31.82, and then $32.31 is your next major support. Coming back on the upside, everyone that took this home long would love to see that closing price of $38.48. Dennis, I want to switch gears here a little bit, and boy, the chat is buzzing about natural gas here, and this thing started a rally a couple days ago, and people are looking for reasons. I'll tell you right now, man, it's cold. It's really cold here.
Well, and that's your catalyst.
There's your catalyst. And also, we don't talk about commodities a whole lot, but once commodities get rolling in one direction, I don't know if there's a big short interest or the commercials come in.
Probably, yeah.
Yeah, if they don't fill the gap like they tried to, we gapped up, they just tend to go crazy. So I was going to look at some of the out of money options on UNG. That's trading up 441. Million shares have traded. I mean, $5. I mean, a cycle.
I don't even know how it's possible, but are these numbers right? I have 95% short interest on UNG. Is that right? Can somebody verify that? What do you have? Do you have that?
I don't know.
I don't know if that's right. That could be right. The reason everybody shorts this thing is the rollover. It's constantly rolling over and murdering people. In the long run, UNG is a terrible investment because they have to keep rolling every month. The way it's structured is structured to decline in the long term. So don't think, if natural gas goes back, to like $10 or $12, wherever it goes. Where is natural gas futures right now? Where is NG?
Let's look at NG here. I just pulled up the monthly because you got to keep monthly perspectives on these things when things start going. And the monthly chart, I mean, if you're shorting this thing, look out. I mean, this thing was back in late 05 here. You had a high at 31,097 here. So you've had I don't know.
Where is NG right now?
4.623.
Yeah. The one consideration, again, I'm going to tell you, this is not the way to play natural gas in the long run is UNG. Short run, day trading vehicle only, not long-term investment. And that, again, is because, and sorry here, I got a lot going on.
That's okay.
Macy's just rallying back here, and anyways, I'm getting burned on it.
I can talk this UNG here because exactly
the reason is the roll. You know how they're structured, right, Joel? The UNG, like it buys the front, it has to keep selling.
Yep.
Every month because it's only owning the next month and it has to keep rolling. And that rollover, costs money to keep doing that. And that's why you have the long-term deterioration in the price of UNG compared to natural gas itself. Because if you look at natural gas itself, we've been $2, $3, $4 for a long time. Well, UNG has declined over that period. So it's just not the best vehicle. That being said, the short interest on this, if it is 95%, you got a squeeze going on like hell here on UNG right now. Is UNG outperforming? Question. Natural gas over the course, like if we look at UNG over the course of the last month or two, was 22 to 33. So I got 37. I got a 60% rise. What's NG in that time period?
And how far back?
Go back to like September, first beginning of September. How much was natural gas then?
I'm
just trying to compare if we're getting
understand.
outperformance in the vehicle short interest.
First day of September, it closed at 3.02.
And what are we now?
460.
Okay, no, it's holding right on. So it's doing what it's supposed to do. It's tracking. The problem is it won't track the other way when it starts going the other way. But anyways, UNG, it's a little bit of a short squeeze, but it's also just, like you said, we got a catalyst. It's cold. It's cold.
It's cold. And, if you're short on this, I'm not sure what to tell you. Usually on these first gap and go days, you should probably try and rein it in. If you're long and you have targets, you should use those. I'm not sure about the liquidity in the natural gas options. You could probably, I'm sure the vol is just spiking through the roof if you want to use it. Cam Mahay is saying UNG is going to drop now. I have found that my instant calls for stocks to go up or down doesn't work very well. So just, be careful trading these. I know I don't know if there's limits or, maybe if you really feel that you have to play it from the short side, maybe price out some cheap puts or whatever. But
why shorting the rocket ship? That's
exactly
what I will ask
Yep.
you. You're trying to call a top. You're trying to short a rocket ship. Me and Spinner, we talk about this all the time. I'm buying stocks that are in uptrends and I'm selling stocks that are in downtrends. When they go parabolic like this, maybe I'm booking some of my gains if I'm long it, but I'm not looking to short it every time. And I should still try to do it. It's natural human tendency to want to be the hero and call a top. I'll tell you, every time I do that, I tend to lose money. It's better to be buying stocks that are in uptrends on dips and selling stocks on rips that are in downtrends. This isn't a clear uptrend. It's squeezing the hell out of people right now. Who knows where the top is?
Just maybe wait for
nobody knows where the top is.
You know,
That's what I'll say.
You know what you gotta
Nobody
wait for? What you gotta wait for is like I still need like 155 or 60 degree day on a weekend because I have not got like the lawn furniture in or my hoses in or anything. So I need one more warm day or one more warm stretch. And then everyone will be like, oh, we're not worried about the cold weather anymore. So that would be, if it's going up based on the cold weather, then maybe perhaps you have to wait for a little bit of a warming streak to go on here. But, also, I mean, maybe people are just selling crude and buying natural gas and, putting, doing some crazy spreads on this. You also get margin calls for people on the short side as well. So I just wanted to get that in there. And then I don't know if I wanted to clear up one more thing here. I don't know if Lucky Streak Trading is in the chat today, but Lucky Streak Trading was kind of unlucky yesterday. And he had a stop yesterday in Home Depot at and it got filled at 172.858. And I don't know if you looked at the low, Lucky, but the low was 172.85. So they had a chance to print you on that, and they did. If your stop was below 172.85, then maybe you have a little bit of complaint. But your stop got hit. Dennis, you just want to talk about the
I get hit, all the time. And you sell the low of the day. We used to call it, Joel and I would say, you made the journal when you sell the low of the day or buy the high of the day. So that's the joke. And I've, when I'm making as many trades as I do in a day, I'm sure that's a lot of days where I sell the low or buy the high. What happens, nothing you do. Stops tend to execute. I mean, you throw them out there and there's a stop out there. If there's anywhere in there, they tend to get them somehow. So I hate using physical stops for that reason, but I get it. If you're not there and you can't monitor the trade, it's a way to protect your capital. I'm typically there, so I usually just use mental stops. If I have a level, I try to put it mentally. I feel like when I put the actual physical stop out there, even though some of the brokers hold them within their own system, I know IB, I believe, holds it within their own system, so you don't get the stop hunters out there. I've talked about stop hunting before. If it's on the books, I know, and it's supposed to be, but I feel like there's people who know where the stops are going to be. I mean, when you got the big hole number, a lot of times you'll see a stock trade through a big hole number by a few cents because they know they're going to trigger some stops by getting it down there, buy from them, and then rally it. That's why a lot of times you'll see if a stock's like, $30 is the big level, comes in the low of the day is $29.96. And that's because they came down, hit the stops below 30, probably bought from them, and then ripped it in their face. Those are the stop hunting bots, and they exist. And there are stop hunting programs there that figure that stuff out. Can they see your stops? I don't think so. It's supposed to be confidential. It's supposed to be anonymous. It's supposed to not be there, especially when they're being held internally a lot by your brokers. But who knows in this market what they can see?
I could tell you that, back when trading at the American stuff, I mean, it's not like they know where the stops are. And, back then the SPOOs were at much lower levels, but, let's say it hit, 699.75 one day, and then it hit 7,700 one day. And then the next day it hit, 698. I mean, the locals, they know that there'd be big stops at 700, and boom, they would bid right below that level and try and get someone to execute it. So it's a little bit.
You can't anticipate where everybody's putting them.
You can't.
It's not rocket science.
Yeah.
Typically, you got, traders there that aren't going to put their stops below the big hole number. They're leaning on the big hole numbers. They kind of just get an idea where they are. And so I think, that would be the argument that, it's not manipulated. And I think to a certain extent, it might be manipulated sometimes. So there's an argument both ways there. But, that's, a lot of speculation on our part. There's no way we could prove or not prove that people are potentially seeing where the stops are.
And I also think, I do use them, and like sometimes you're like, oh, they got me at the bottom, but there is a relief to being out of a losing trade, and
for sure,
a lot of
there's still a purpose in them.
Yep.
Like they talked about a while ago, getting rid of stops altogether. They actually talked, at the regulator level of saying, especially after the flash crash, because so many stops get triggered at really bad prices during, extreme volatility, and a flash crash not going to get any more extreme than that. So there was talk about, eliminating the stop option, but I actually commented to the SEC on that. You can download my letters when I was at on the panel there on June. I think it was in June or June. It was in 2016. And I said, I think the stops shouldn't be eliminated. I said, limits on the stops are fine. I said, there should be better education regarding how they work, but I don't think you can eliminate the stop because it handcuffs the investor who can't be there. So you all of a sudden don't have a stop order. How do you really manage that risk? So, and I think that was my argument there. I could actually post the paper there, but I wrote comments, and I gave those comments back when I was at the SEC there back in June of 2016.
Testifying at the SEC.
February of 2016.
Real quickly, I want to cover the XHB, the S&P Homebuilders ETF, and that took out some monthly support at 38, was in a downfall. Interesting move here. This is for DC1. I'm focusing, you had a low of the move, multi-year low at 31.82. Then you got to pop up to 35.60. And now you're peeling back here. So you got a little bit of a retracement. I'm keeping an eye on 33.70. We haven't quite hit that level yet. But, you have a rally. You have a little bit of retracement. And to see if this move is for real here, I'd like to see this hit 33.75, 34 even, and then boom, start another leg up. But that's what I'm looking at. It does have rebounds after a really bad end of September and October, but 33.70 is what I'm looking at. And then also you'd love to see it take out that high of the move. And actually there were several highs at the 35.5 area. There was one at 534 and then a 3 in the 40 handle. Then the actual high of the move at 35.60, 35.52. So 35.5, big number on the upside to get through for the home builders. All right, Dennis, a couple tangents there. Where you want to bring me back?
We got a minute here before imbalances. We'll get to those in just 1 minute here. Let's just go back to the earnings parade here. A couple other ones that we missed. From last night, we had Wix, which is obviously Chinese stock here, Wix.com. It's traded down significantly. Give us those numbers, Joel. We'll just break down technicals. WIX.
Is this the candle maker?
No, you always make that joke though. No, it's not the online candle maker, although that would be a great ticker or great URL, Wix.com.
Okay, Wix.com. Let me go to my trusty Benzinga Pro. And not a bad report overall here. We had a beat on the EPS. Street was looking for 25 cents. We came in at 39 cents and had a revenue beat as well. Estimate was 152.84 million. They came in at 155.6 million. So there's a good report there. Dennis, did they give some guidance, or is just the hate on here for Chinese stocks?
A little bit of that. I think there was probably, and I don't think the hate's on, actually. I'm going to argue with you on this in a second. This could be a good tangent for us, but I think the numbers were disappointing. It really didn't beat. I mean, WXC's revenues for the fourth quarter, 161 to 162. Estimates 161.5. It's just not good enough. They did do $100 million. They beat nice bottom line beat, but the revenue guidance is not great. And we always say top line is the most important. I think that's why it's traded down. But let's look at these charts of these Chinese stocks, because you know what? I'm called a comeback here, but look at Alibaba. I mean, Baba here snuck up there, almost got to 150, didn't quite get through that big hole number, psychological level of 150, but it's up another $1.50 and showing some life. You look at the FXI overall, kind of showing some life yesterday. EEM kind of showing some life. We've got some life here in some of the Chinese stocks, despite the market not having a great day yesterday, giving back all of its gains. The Chinese stocks kind of held on, and they're rallying here again.
Number there. October CPI up only 0.3%. Not sure where estimates were. That put a bid in the S&P 500 futures market up now 8.25. Dennis, what I've just been noticing, and I know you take off a little bit after the open, but there's just vacuums here in this market. Of course I'm sticking in, to my levels, being diligent, what I do every day. But if I showed you my sheet, there's just 1 stars here. There's nothing. Yeah. There's just no good, there's no great numbers. Market's really trying to settle down here. So your pre-market high comes in at 27.4375, but yesterday's high is way up at 27.55.75. Coming back on the downside, we got through yesterday's low, which was 14.50. We got down to 11 even, and now we're 26 handles above that. So I'm going to sit on. I think today could be just a good sit on hands day and just let this market just find some support or resistance, but really trading in vacuums now. Did you want to cover some imbalances?
Quickly looking, they're pretty small. GE 153,000 to sell. We'll talk GE in a second because it had a wicked rally there yesterday, bit of a short squeeze. You know what? The other ones are small. Let's just go straight to GE. There is a seller that's still there. It's sellers there every morning. It's not rallying here yet, but it was a nice candle for GE yesterday. I was a wicked rally in the morning, I tell you. Stock went from $8 to $9 by noon. Big pop, pulled back. Is the low in GE? Well, I think temporarily it is. It's easy to call in hindsight. Down to 772, we're significantly off that. So now, as it comes back in, you'll get people who, obviously are short that'll be willing to bring it in. So you're all of a sudden create some underneath demand. That's the good news for GE. The bad news is there's still an awful downtrend here. The bad news is the company is still in shambles. And I think as you get higher, you're going to have people willing to cut their losses too, especially at the end of the year, because, we get that tax write off. So I think you got 2 things working against it. One thing working for it is that it did have a nice pop yesterday. And I think, it could back and fill a little bit. Like you say, I think you do find buyers in the lower 8s now.
I was watching this thing go, and they did have some news that they were selling some assets, which is not bad if you're selling your good assets. So I'm watching this thing. I'm like 830, 840, 850. Yeah, I want to short it the whole time. 860, 870, 880. Then it gets like over 9, and I wish I would have been a little bit quicker here. You had a gap down day, and we talk about gaps in the market when I think it was maybe the JP Morgan note. And you had a gap. You had a low at 905. The following day, the high was 896. Then went up and kissed that gap exactly. It filled that gap at 905 and then sold off here. So we'll have to figure a 50% retracement in there of that move. What was the low in that thing, man? The low was what? 772 to $9.30, 65 cents. Yeah, 840, 850 level. Before we bring our guest on, Dennis, here, let's talk about PC.
Wicked rally in the market right now,
I know. PCG, Dennis, down $5.69.
Yeah. Well, then they came out last night saying they think they are liable for these next fires. They were liable for the last ones. They're liable for the next ones too here. We got a mess here. This company, you could say, okay, well, maybe they're going to survive this, but PC&G, so this is from Citi. They're saying their damages could be as much as $15 billion or more. So this is just credit downgrades coming at them. They're going to get sued by everyone here. This is an absolute mess. There's the outside chance that something like this could actually not survive. And that's a possibility here. We don't know that. Maybe they turn around and they do find a way to survive this, but they've already been hit once. Now they get more liability against them. It looks like they are going to be liable here. It's a big problem. So, that's the scary thing here. If you're owning PCG, there is the outside chance that this could be a zero. Now, I mean, we don't know anything. Maybe they find a way, but what's the what kind of cash they got? Can they pony up 15, 20 billion dollars to pay in the case that they lose? I mean, we don't know, and that's why you're seeing the stock get absolutely killed here on this, because they don't know. Like, the liability could be so significant that this could actually put the company into a situation where it is insolvent. That's why you're seeing the stock trade down significantly here. And I'm not trying to scare any investor that are in this. I'm just saying there's a lot of unknowns here if you're coming and buying PCG today at 26 bucks.
Do we have someone on the line here?
Good morning, Benzinga.
Nice. Sean Udall. How are you, buddy?
Good. Hey, well, okay, what were you just
we're talking PCG.
PCG.
Yeah, we're talking. It's out in your neck of the woods there too. We're going out. Well, not your neck of the woods, but California. So you're on your side of the country.
Is this a power company, a utility?
Yeah, they're down another 18% because they're going to be liable, it looks like, for these California wildfires here. City's estimating maybe the liability might be over $15 billion for them. They're down another 20% here. I don't know if you've been following the story, Sean, PCG. We know you follow the tech stocks, but you follow everything out there. But this stock was $46.
I follow everything kind of, but honestly, this one kind of escaped me.
Check it out. $48 3 days ago. It's now 26. They got hit on their last ones, and they're getting hit here again. This is not pretty.
No, this is interesting. No, okay, so this is a utility. Couldn't they just raise rates to recoup some of this? I wouldn't think that putting the utility into bankruptcy would be.
I don't know if that's. I think that's the fear. I shouldn't maybe say that right now, because that's the fear. But we don't know anything, if that's really going to be the case here or not. That's the fear, though, Sean.
Yeah.
When you see a stock go from 48 to 26 and it was $70 before, is that maybe this is going to be so much that you can't even handle it. But we don't know anything at this point in time. We just know that, hey, there's going to be a lot of liability here. They're going to owe a lot of money. And can they pay the bill?
Well, I can share a quick personal story. So I was at one point in my life, I was a broker. And I had a lot of clients that had a utility company called Montana Power. And one thing that Montana Power had done erroneously is, guess what they got into? The bandwidth business and the energy business, the energy trade. But it was more, they tried to be more like a level 3, if you remember that name, of yesteryear. So what happened is they took a great, solid, one of the best performing utility companies for, how many ever decades. And they tried to turn it into a high growth telecom play. And I don't know if Montana Power ever went under, but it went from like 40 to 5 or 40 to 2 or something. So it is possible for utility companies to make a big mistake and suffer a huge decline.
A couple comments out of the chat. PCG supplies electric and gas to all of California. So, I don't know. And this is just total, speculation. Go into government receivership or something. California is going to need power. Same comment from the same person. It's illegal for PCG to increase rates to pay fines. I don't know. And then Troy Webb mentions that California hates PCG here. And what about the bondholders, Dennis? What about the bondholders of PCG?
I'm not following the bonds, but I'm sure they're not good. There's a lot of preferred stocks that are out there, and those things have been killed there too. There's like PCG, E, F. You can look at all these different letters, like 6 or 7, and they typically track the bonds. Those things are straight down here too. I believe they haven't even been paying a coupon, the preferred stocks, for a while because of the last, California wildfires.
Yeah. Boy, oh boy.
This is a mess. It's a mess.
Nutty stuff. This was a $70, $80 stock not that long ago.
That's all the California wildfires. That's why it's been hit down. And maybe if they find a way out of this, I think that's off the table there. But it's a crazy move when you think a utility is typically a defensive play. This was anything but defensive the last couple of years.
We're on the line with Sean Udall. He's the CEO of Quantum Trading Strategies. He joins the show. He has his own methods of breaking down the earnings for the companies. He has his other methods of technical analysis that he likes to show with us. Sean, first of all, I know when I was talking to you during the little tizzy that the market had in October, and you were waiting for like something good to happen, and you thought it would turn the market around, and you felt that Facebook, just kind of coming out of that earnings, that kind of gave the market a sigh of relief. We had a nice rally, kind of a ridiculous rally after the election.
Yeah.
But now we're just kind of wandering here in no man's land. I kind of would like to see us in the lower, 2,700 handle, because that would have been the 50% retracement of the move. They hit 27.11 last night. SPOOs, stocks, real, loosey goosey here. What are you looking at here for next catalyst?
Yeah, I almost think this was one of the most predictable sort of sell-offs post the big spike. And by the way, almost to the day, the Facebook earnings report almost to the day was the bottom of the market. So I made that call pretty darn well. And again, so what happened? And again, almost to the dollar. Amazon went from 1,500, a price where it probably should be or lower, rallied 250 points, almost to the dollar of 17.50 on Amazon. Market started selling off. So again, you could say China trade, whatever. Basically, I think a lot of stocks just bounced way too sharply. But here's something I don't think anybody expected. I didn't really expect this. I didn't expect that we would get as much of a V move. I thought we would have more of a bounce down, kind of one of these consolidation type kind where the weakness is more drawn out. So I was we had a very, very sharp V move. We actually have an inverse head and shoulders on most of the indices right now. The fact that CNBC noticed it, mentioned it yesterday, probably means it won't hold. So yeah, I'm kind of with you. I think anything between 26, 2,700, a lot of good buys emerge again. The thing I'll say is I'm actually just started this week trading a lot more frequently again. I've been waiting a few months. I've been waiting for conditions, but I finally have a lot of good stuff to buy. We finally have a lot of intraday volatility, and we finally have a lot more overnight volatility. So I think the trading environment has gone from terrible for roughly 6 months to outright getting really good again.
All right. So what are you buying here? What's on the shopping list here? As the market pulls back, we got up double top at 28.19. We're pulling back here. What is on your shopping list?
Yeah, well, I'm kind of in a transitionary phase again. Kind of some of my favorites before have worked pretty well. One of the names I was a big buyer and I had accumulated good position is I got a little bit of a good score on Finisar, but Finisar agreed to a very, very skinny M&A premium. And I almost think, we could talk about this longer if you want, but I almost think they were forced to do it. So IIVI is the company called 26 is going to be buying them. They literally are getting Finisar at an unbelievably good price. And IIVI went from being a name I used to trade once in a while to now it's almost one of my favorite names, excuse me, in the fiber optic space. So they're literally getting an M&A gift that I would compare to how good is this deal? Okay, Micron bought Elpida in 2013, which was literally a game changer for them in the DRAM industry. I would put this IIVI buying Finisar, especially for the price they're buying it, in similar category. I think you're going to see IIVI being a much more dominant company in the fiber optics with 3D sensing.
Well, that's had one hell of a haircut.
Quickly,
yeah. What do you think? Had one hell of a haircut here from over $47 under 34 here, back at 36.50. So the fact that it picked up a company that you really liked on the cheap, are you going to shift your interest here to IIVI?
I am. That's exactly. In fact, but here's the deal. So, I think you guys asked me you might have asked me about such a wide spread on Red Hat a while ago.
Yeah.
Right now, there's still a risk off pulse in the market. So M&A deals tend to have wider spreads. So the Finisar spread's huge. I mean, they're supposed to get taken out for $26. They bounced a buck yesterday and they're still only at 22. But yeah, over time, I will eventually transition basically my whole Finisar position into IIVI. So that's exactly my plan.
Okay, let's move on to some of the big boys here. Apple on the skids here after the last report. LIT news certainly didn't help it here. I know you've been a long time follower of Apple. Is this a just a nice pullback, a nice buying opportunity here, or a change in trend in Apple?
Well, you know me, I was probably one of the biggest bulls on the planet a few times in my life on Apple. I have not liked Apple. I mean, most this year I've been negative on Apple. I thought the price has gone up too much. I thought they got away with 2 or 3 kind of mediocre quarters. So they're kind of finally having the sell-off that I actually thought they were going to have, I don't know, 2 quarters ago. I don't know. Could Apple go to 150? Maybe. I think it's certainly going lower. I think it's now it's going to kind of just vacillate with the market. If the market's up big, they'll probably be up. But I think we broke FANG. I think by and large, the FANG trade, the cloud bubble trade, and Apple was part of that FANG trade. So until we could basically put a fork in the FANG names for good, like meaning they go down, they finally overshoot to the downside, Apple probably trends lower until that FANG reversal trade is over. That's my best guess kind of holistically. But I don't really like the stock yet. I like it a lot at like 145, but that's quite a ways away from where it is here.
Yeah, that's a good $40 away. Earlier in the year, we were talking about oil, and I know you made a bull case, and before it started going up here, and you thought maybe $100 was on the horizon, and you weren't the only one, but we did a 360 here, just above $76, 12-day losing streak here in oil. I'm sure you're going to revise that target down a little bit, but are you going to be, looking to play either crude oil or related companies here on this one of the biggest sell-offs, I believe, in the history of crude oil?
Yeah, well, so it didn't quite get to 100 yet. Almost got to 80 from 36. I mean, that's a pretty big move. The oil's maybe one of the more interesting trades. There's a name, Silica, SLCA. I like Apache again. I like Devon. I have not bought any of these, and I think the main reason is because we've had a big sell-off in a lot of my favorite tech names. So for me, it's all relative.
Where
but
are you going to put your money?
All things being equal, I think the oil names represent a lot more value now than they certainly did, 4 or 5 months ago, and certainly 2 years ago. So I don't know. I'm looking at the high quality oil names. I own a little Silica. I own some Whiting Petroleum. Whiting went crazy. That was kind of one of those fear of death trades that came good, right? So there's some interesting stuff. I actually, it's funny. You said you're going to lower your expectation for oil. I'm not. I'm actually. So I was thinking kind of 80 to 100 before. Now I'm thinking 100 to 125 on oil. I actually think all the conditions exist for oil to go up quite a bit more than it has.
What conditions?
Well, I think people misunderstand what's going on with the global economy. You don't get, we had such a kind of a post-Obama tepid recovery in the U.S. and the globe, right? And it wasn't Obama's fault, but it was kind of strange that, out of a condition of a 666 S&P and literally a company, or the global economy on rock bottom, typically out of a financial crisis or out of a massive recession, you get a really, really robust recovery. We never got that. We actually had well below norm growth for almost a decade. So I'm kind of on the other side. I actually think we have a GDP global growth story that is kind of in early innings that's largely being misunderstood. And everybody's kind of painting this into, the next recession's right around the corner. And again, we'll have quarters where we'll have 2 or 3 quarters of declining GDP growth. But I think globally, there's a global GDP growth story that people will probably be talking about in 1 or 2 or 3 years that's way more powerful. And I basically think it's just global economics will drive oil prices higher.
What about Qualcomm? That was a stock that you were talking about as it declined, got near $50. I think you gave maybe one of the times you're on is your top pick, and then $76 almost straight up here. Did you get a chance to peel back at any of your Qualcomm? And as it comes back here, in BZ Tokyo has been asking me for a couple days, does he see Qualcomm, meaning you, losing out on the patent battle with Apple, and it's just kind of dead money. What's your thoughts on Qualcomm?
No, so any, almost any time I have something that goes up 50%, I definitely take them off. I took every penny of Qualcomm off that I wanted to, and kept kind of exactly the amount I wanted to. And here's the thing: I have not bought back what I've sold yet, and that is purely technical. I kind of felt, in fact, some guys were asking me in my subscription service, it was I'd buy her at like 58, and I said, nah, I kind of think 53, 55 area, if not lower. And well, we're 54 now, so I could. It kind of depends how a couple things turn out, but put it this way, it's well within my preferred range. I have a $90 to $100 price target on this thing. I think this is it's my single favorite large cap tech stock, period. Just like Apple was in 2013 and Google was in, what was that, 2006, 7, whenever the last market kind of bottom was, Google was my favorite stock. So I think Qualcomm is slated to get, I don't know, has Apple not paid them something like $10 to $12 billion that they owe them now? I mean, they will get paid. I mean, I don't really have any doubt they'll get paid. They'll probably have to strike a deal where their future payments are slightly lower. But 5G is coming, and they're sort of the global gorilla in 5G. I mean, it's just I literally have to laugh sometimes at the price action of stocks, because as silly as Nvidia was at 300, Qualcomm's probably equally silly at $51.
I gotta ask you. We're talking 5G here. I gotta talk to you about a favorite stock of one of our employees here. What is it? INSG? Is that it? Are you familiar with this stock? It's Siegel Corporation. Have you done it?
Don't know it.
Yeah, okay. Matt Kolb likes it in the 5G space here. So, all right, let's just cover one or two of your shorts here, and then we'll let you go. I know you had mentioned Activision. That might have been a target of yours. I don't know. Did you get a short off in it, or?
I think Activision is part of IGV, which is an ETF. I'm short. Right. I don't know if it's one of their top 10 names. I'm almost positive. I know EA is one of IGV's top 10 names. I did cover New Relic. So still short Microsoft. I still think I really, really like that short, by the way. It's kind of a chicken short. It's not a short that is going to produce me, like Microsoft's probably not going to drop 50%. So I'm not going to have one of these shorts where the stock can get cut in half, but it's a safe short. I feel very good. I can actually short it in size. It's a good hedge. I covered New Relic.
What's the symbol on New Relic?
New Relic.
What's the symbol?
Oh, go ahead. What was that?
Symbol on New Relic.
NEWR. I missed reshorting that after the earnings pop, because I knew they were. I don't know why I didn't do it. Sometimes you just know you should do a trade. I was sitting there looking at like 98.80 or 98.50, and I just didn't press the button. I mean, sometimes I guess we hesitate. I mean, any of us can get. I wasn't fearful. I don't know. I can't even explain why I didn't do that trade, but I didn't do that trade. So I missed that short, and I am looking. I mean, that you get a big enough pop in all these stocks that I still think are pretty overvalued. I mean, hey, if Nvidia pops big, I think that could set up to be a good short.
Okay.
Because $100 off of Nvidia is still. I don't think it prices it anywhere near where it should be priced.
All right, Sean.
Give me a 50. Oh, go ahead.
We're up against the clock here. We got to cover a few more stocks.
Sure.
I just wanted to let you go. Sean Udall, CEO of Quantum Trading Strategies, sharing his bullish and bearish picks. Sean, thanks for coming on. We'll talk to you again soon.
You bet. It's trading time over here in Arizona.
Go.
I like to set up for trading.
Okay. All right, Sean. Thank you.
Later.
SPOOs up 13.75, 27.41 and a quarter. Pre-market high 43.75. Are the stocks under the hood confirming this rally, Dennis?
Yes, they are. I mean, you've got everything trading higher here this morning. I'm having struggles finding stuff that are just down. Some of your food stocks, some of your defensive names, probably your components in your XLP could potentially be down here. But really here, I'm seeing across the board rally here in a lot of stocks, especially tech stocks there. So I would say, yes, this isn't one of those rallies that's like, oh, well, the stocks aren't participating. The stocks are very much participating here in the pre-market. So keep that in mind if you're trading here this morning. There is some legs to this lift. Now, things change very quickly. We saw a nice rally yesterday. And yesterday I came out and saying when we were up about, we were up almost this much. We were up pretty substantially yesterday too. And I said, I think we're going to eventually go red. We did. So I was right with that call. I don't know if I'm saying the same thing here now or not.
Okay. I know. I mean,
could we have a repeat? Could we go red here again? We could.
I don't know.
I don't think I'm chasing it, but I think I'm more of inclined to buy the pullback now. So, and I think that's the difference here, Joel, is I think I would actually be a buyer on the pullback here. So if we were to pull back, let's say, get to settlement or close to there, I think I would be a buyer, and I think there's a lot of money managers that would be a buyer as well. So I think you're starting to create a little bit of underneath demand, especially since the Chinese stocks are kind of leading the way, and that's kind of been ground zero with this market for a while. I mean, really in the sell-off back at the middle of October and end of October, it was the Chinese stocks that were bringing us down. Those look stronger right now. It looks like those have put in a bottom, and that makes me more interested in potentially coming in here with some longs. So don't think we're out of the woods by any means, but there's some hope here all of a sudden for the longs.
The hope trade. Dennis is into the.
Yeah, I know you're not supposed to be in the hope trade, but I kind of, want to be in the hope trade. I'm hedged right now. I'm actually a little bit to the short side just because we've rallied so much. I've been putting on shorts as I've been doing on the show. We know I'm a fade trader, and the fades have been paying me lately. But I don't know. I'm torn on this market here. It's just it's one of those days where we're getting a wicked rally off the bat, and part of me, my spidey senses want to say, let's short this rally. And then part of me is not as convicted as I was yesterday in that call.
I don't have the actual numbers, but adding to this Chinese rally here, 10 cent had a beat. They beat both on the top and the bottom line. So
it's the biggest company over there, really. You know, we think about Alibaba because it's not trade over here, but Tencent's huge. And that's a huge beat. And it's a stock that's been absolutely killed. I think it trades as an 80 off exchange over here. It's like TE, what is it, TCHY or something over here?
Yeah, it is. Yep, exactly.
So it's crazy letters anyways. But if you look at that chart, I'm just trying to bring it up myself.
That's all the gaps and everything in it. Charlie.
But you get a feel for it overall. You can see how much it's been beat up here. I mean, over here on the OTC market, it was $60 back in April. And we're talking about stock that's 35 here today. So it's been beat. P's like getting reasonable. I think it's 27 or 28 if you believe the numbers. We know there's always sometimes a little bit with Chinese reporting, that sometimes the numbers aren't as believable as you'd hope they were. But I don't know. It's starting to get some value down here in this.
$38 is the level I'm keeping an eye on here. That 38 flanks your highs from November 5th and November 6th. Currently trading up in the pre-market session at 36.75, up $1.65. So that's pretty close to that level. So let me go through our trusty document here and see what we haven't covered. Ratings, Dennis. You want to do a couple?
Go.
Apple down at Guggenheim. What does that do?
Not influencing the stock. There's been too much action in Apple now. Ratings aren't going to impact it very much. So, if you look like, why is Apple not trading down? I mean, Apple's trading with the market here now. It's doing its own thing to a certain extent. Ratings aren't going to be very influential when a stock is this volatile and it's been beat up this much. Basically, Guggenheim just late to the party here. It's a chase. It's a chase downgrade. They're chasing it.
Chase. Okay. Thank you, Edward Jones, for downweighting PCG to a sell.
So, that's called late to the party too. Maybe not. They downgraded the stock. What did they put a price target on it?
I
don't know. I don't under the bus on that one, but
that's okay. It's all right. I deserve it. Got some tracks.
I'm just curious if they really lowered it, if it's sell or if it's just like a catch up. I mean, the PCG is a wild card. If you're trading that thing, it's going to be all on headlines. Last night, the reason it's down $6 is the headline again last night that they look like they're going to be liable here, and they're admitting that they might be their fault. So, Citigroup saying liability upwards over $15 billion. So, I mean, there's so many unknowns there. I'm not buying it.
I'll tell you. You know what? Give me my cold in Michigan. It was 20 degrees today driving in, man. Cold versus wildfires. I mean, it's scary out there. I had a buddy that lost a house in the Ventura fires, and man, oh man, I mean, it's just It's scary out there. Downgrade from hold to sell. They don't have a price target on it. Kellogg down at JP Morgan, overweight to neutral. That's having an impact on the stock here. It's trading down $1.04 at 62.38. Big level on this one. Kellogg, look out, folks. The low of the move. It's taken out the low of the move, 62.55. So this better hold 62.50 off the hop here. You got some more downside.
Same thing we talked about yesterday. We just talked about this. Look at the market. The market's been going straight down. Let's put it in perspective here. The market has not been good in October and November. We are down significantly from where we were at the beginning of October. You're down 200 S&P points. You would think in that time period, well, Kellogg's is going to outperform because it's defensive. It's a food stock. It's the kind of stock you want to own when the market's going south. In that same time period, Kellogg's has went from $70 to 63. It is not performing when it is supposed to perform. Now, yes, they had a disappointing earnings report in there. Yes, the sector is in shambles, but that's just not the kind of stock. It can't perform in this market. It's not going up when the market's, going down, and that's what it's supposed to do. I don't want to own it.
You don't want to own it?
When is it gonna perform if it's not, gonna play defense? Like you buy those stocks for the defensive aspect of them, and and the dividend. And I think 3.59%. I'd rather have my money in some short-term. You see it right now. You get 2.5-3% on your money right now in government securities. So, or lower risk, securities there. Maybe you've got to go a little bit closer, but it's there. It's there. So, the dividends aspects of 3.59% is not nearly as attractive as it was when you couldn't get anything on your money.
Okay. All right. We are going to wrap things up here. As we end the show, the S&Ps are up 13.5 handles, 27.41. Pre-market high 44.50, folks. If you're looking for more on the upside, Tuesday's high was up at 55.75. So keep that as a potential target. Coming back on the downside here. Mid-range on the session is way down at $27.30 area. So on a pullback, that's near the close. I want everyone to tune in tomorrow morning. We'll have our regular show from 8 to 8:30. But at 8:39, we will be bringing on Gene Munster of Loot Ventures. He is known for many of the great tech calls that he made at Piper Jaffray. I've started a document here with some questions from the chats that you've given me over the last few days. So if you want to quiz one of Wall Street's top analysts, and we'll be grilling him on Apple, Tesla, Google, Facebook, Amazon. We're going to throw some Twitter questions in there. So if you get any ideas for questions to ask Gene, throw them in the premarket.benzinga.com chat, and we'll sure get to them. Dennis, thanks a lot. I know you're busy here. We're running. I was almost perfect today. I forgot to share the screen, and that was the only thing.
We'll forgive you this time, Joel.
Big thanks out to Chris, who helped me out and just came over and kept on pointing share. So I should have kept the little document that Spencer left for me out, and I wouldn't have done that. But that's it for the day, guys. Good trading. We'll be back with you tomorrow morning.